Hey everyone, me Kevin here. We need to talk about the Tesla miss this morning. And the first reaction that a lot of folks had was, don't worry. Even though right now Tesla has had its first sales decline in over 10 years with a 1% decline in sales volume, things are going to get better in 2025 with the release of a lower cost production vehicle. Now, while in this video I want to talk about the stock price and the valuation, what Wall Street is reacting with, what we think for earnings, I really want to start by addressing that claim. The claim is that, okay, we're going to have a lower cost vehicle coming out in 2025. And the first thing that I like to do is I like to evaluate where is that claim coming from, so that way we can address the likelihood of that happening. And so I know exactly where that claim is coming from. The claim is coming from, well, Tesla itself. See, if you look at the Tesla Investor Relations page and you look at their shareholder deck, you'll find this section right here. This is the Q1 2024 shareholder deck. And you're going to see I'm going to show you Q1, Q2, and Q3. Those are the last three shareholder decks we have. In 2023, we did not get any mentions of this, but we did in 1, 2, and 3. And they changed. Take a look at this. So read this line here for a second. Here, I'll hide myself for a second. Okay, I'll read it to you. We have updated our future vehicle lineup to accelerate the launch of new models ahead of our previously communicated start of production in the second half of 25. Okay, got it. So new vehicles, 2025. Sounds cool. Lower cost vehicles, that's great. What do they say in the next press releases? Well, they say the following. Plans for new vehicles, including more affordable models with an S, remain on track for the start of production in the first half of 2025. Aha, wait, but this says second half. Yes, they got more optimistic. They moved up the production of these more affordable models. Okay, interesting. So what are more affordable models? Well, they could be one of two things. One, they could be the RoboCab. Well, actually, they could be one of three things. They could be the RoboCab, or robotaxi. They could be a $25,000 non-fully autonomous vehicle, or they could be cheaper existing models of vehicles, right? Here's the Q3 one where they say the same thing. Plans for new vehicles, including more affordable models, remain on track for production in the first half of 2025. Okay, so remember the three options that we have here. It could be a RoboCab, it could be a cheaper existing models, we'll call it, or a new model entirely not fully autonomous. Okay, but wait a minute. It says more affordable. Well, the current most affordable vehicle, let's go to Tesla.com and find it. It's what, in the lower 30,000s, right? So let's go to a Model 3. Let's get the order now. Let's take out things like gas savings or whatever. Cash, $29,999. Remove the gas savings. The current more affordable model is about $42,400. Okay, interesting. So if we're at about $42,400 right now, let's write, we would have to have less expensive vehicles basically than that, under $42,000. Now that's possible, right? All three of these things are possible. This could be mentioning the robotaxi product, cheaper existing models, just lowering prices, basically vehicle deflation, which is probably likely, especially since we're seeing some sale numbers come down here, and a new model entirely not entirely fully autonomous, under $42,000. That would, any of these three things would fulfill the promise. Now the question is, could it potentially be the $25,000 vehicle versus the robotaxi? Well, for this, we could go to the Q3 2024 Tesla financial results, and let's listen to Elon talk about exactly that.
So anyway, there's like basically, I think having a regular 25K model is pointless. Yeah, it would be silly. Like it would be completely at odds with what we believe.
In an autonomous world, what matters is the lowest cost per mile of efficiency of that vehicle, and that's what we've done with the robotaxi.
Exactly, autonomous. It's fully considered cost per mile is what matters. And if you try to make a car that is, essentially a hybrid manual automatic car, it's not going to be as good as a dedicated autonomous car. So Cybercab is just not going to have steering wheels and pedals. It's fully designed optimized for autonomy. But no, it'll cost on the order of cost roughly 25K. So it is a 25K car, and you will be able to buy one on it exclusively if you want. So just what have steering wheel comes. You don't need it.
All right, got it. So this gives us a little bit more clarity because now we can go over here and we could say, all right, so it's not going to be, this will not be 25K because that would be pointless, right? So I suppose this leaves open the door to a, maybe 30 to 40K vehicle, right? But this would likely, in my opinion, okay, just my opinion, just be a cheaper Model 3, especially as the $7,500 tax credit expires, which actually is somewhat surprising to me because, the $7,500 tax credit, Donald Trump, one of the first things that he said once he got elected, with Elon Musk's support, is that they're going to kill the $7,500 electric vehicle tax credit. I was convinced that was going to mean we are going to see a rapid acceleration of Tesla sales because people are basically going to want to buy the dip before the coupon code expires, so to speak. Should I mention it? Okay, yes, we have a New Year's coupon code over at meetkevin.com. You could join me in the courses on building your wealth and everything on Entrepenomics. The best course right now. If you want to know, with the amount of new content that's planned for that course, you want to be in it. The price is only going to go up this year as I keep releasing new content, but it's really good. And here's a picture of me with my Cybertruck. Which, by the way, this Cybertruck, you saw that explosion that happened yesterday in that Trump attack, the Trump Tower Vegas attack. Apparently a military vet, very, very sad, killed himself, with a bed full of basically gas and fireworks and stuff. Shocking, but it really just, it was so strong, it really didn't cause a lot of damage. It didn't break any glass at Trump Tower. It just absorbed all the blast. It seems like most of the blast actually went inside of the cabin. Sucks for the guy. And then up. But this is an example of my Cybertruck. And I really enjoy the utility of this, and I really like. I'm gonna buy right now another one of these partitions because they're so useful. I can't stress enough. I don't think I've bragged about a car this much, but I really like the Cybertruck. It's really, really good. I do miss my Model X. The Model X 7-seat version is a scam though. Don't get it because your trunk room goes to 0. If you are a family and you need space. The max you could really do with a Tesla is 2 kids, because don't think the 7 seats going to work because you won't fit a stroller in the back. It sucks. It's pretty much true for all of the cars. So just assume 2 kids, 2 adults, max. After that, you really got to get into the van world or sprinters. Anyway, I wish they would come out with a larger vehicle. But anyway, the accessories they have for these are great. And I know I'm going on a little bit of a tangent over here right now. I don't even know where I can find the accessories right now. I know they put all these crazy pictures and stuff over here. But the vehicle really is phenomenal. It drives well. It's comfortable to drive. And I also really like that it's higher up off the ground. And what's really remarkable is I got Lauren to start using the, what's it called? Let me just see if I can add this to a cart or something and then go shopping in the store. I can't find it. Oh, well. They should make it easier. Here, Tesla Cybertruck accessories. Anyway, I got Lauren to finally start using the Model S, which is, she loves it. So it took a while to actually get her to really love it and want to drive it because she was always sort of afraid of oh, it's a Tesla, I don't know. But honestly, now she's kind of like, nah, man, yeah, this is actually really good. So people are slowly starting to learn how great it is. Anywho, oh, this is really cool. Cooler in the front. This, by the way, is great. I will say this is fantastic. I put my golf clubs in here, the underseat ones. It's a perfect little tray back there. Anyway, I'm totally off tangent or off topic here. So let's get back to topic. So RoboCab is an option. We know this is going to be about. Yes, we know for sure this will be more affordable than 42K. So we know this with certainty. we know that it's not going to be, we know with certainty it's not going to be a $25,000 vehicle. So we might be talking about cheaper existing vehicles or the robocabs in this disclosure here, right? Which with the $7,500 vehicle tax credit expiring, new models going into production, the only thing we've heard about new models going into production so far has been the robocab. Because during We Robot, Elon Musk said that we should be at mass production, quote, before 2027, which means entering production in 2025 and then mass producing in 2026, before 2027. And he calls this optimistic, but that's basically what he's outlined. So I think this is really interesting because I do think that as a Tesla investor, you really have to recognize that, yes, this is a company that is betting the farm, basically. I shouldn't say the farm because that sounds bad. But you have to remember what Elon says. And I was talking about this morning in the course member live stream because we're starting to do the course member live stream as the market open live stream. I apologize about that. There's so much going on in my life. I just had to consolidate back to just doing one live stream in the morning. So if you want to be a part of it, meetkevin.com. You pay once, you get lifetime access. But what I talked with course members about is I said, if you don't believe in FSD's ability to handle fully autonomous, don't buy the stock. That's not my line. That's Tesla stock. That's Elon Musk's line. And that's because this new model that they're talking about, in my opinion, has just been a tease for the robocab all along. All along. These 3 quarters have just been a tease for the robocab. And I'm not saying that's a bad thing. In fact, they kind of gave you like a nice heads up that it was coming. What day were these earnings? I think it was like October 17th or something like that. Q3 2024 Tesla earnings. It was October 23rd. Oh, okay, close. Yeah, and We Robot was 10/10, so that's all pretty fresh information. So now that leaves you with the question of, okay, well, what happened with the decline in production here? Well, there are a few things that happened. First of all, you had flat sales in the United States. You had Europe down 14% year over year. Europe's basically in a recession. And this is very different from the sovereign debt crisis where everybody might remember pigs. If you don't remember, it's a really derogatory thing that was used back in 2011 to about 2014. And the definition was Portugal, Italy, Greece, Spain were so heavy in debt that countries like Germany and France were having to bail them out. That was the thesis then. Well, now all of a sudden you look and you're like, bro, Germany and France are lagging. Germany and France, the leaders, are now potentially in recession, especially Germany. So it's not a surprise that European sales are down 14% year over year. But remember, the European sales only make up about 14.8% of Tesla's total sales. China's closer to like 22%. So China beats Europe by a lot. But China's also facing a lot of BYD competition. BYD grew their total sales by 41.4%. Plug-in hybrids of that, 301,000. But pure battery, 207,000 vehicles in China. That's pretty good. That's a pretty good number. It's still not like what Tesla's selling. I mean, if Tesla's doing about 22% there, they're still beating BYD by about a factor of 2 even in China. But when it comes to pure electric vehicles, but you're selling quite a bit, and the growth is pretty phenomenal for BYD. Warren Buffett invests in BYD. He's got about a 0.6% stake of his portfolio in BYD. Most of his portfolio is Apple for the dividend and Bank of America and American Express. Honestly, American Express and Apple are pretty good companies. I don't like Bank of America. But anyway, so then it got me wondering, okay, why are we not seeing maybe just a more affordable version where people would have the choice to buy a second vehicle with a smaller battery pack? Lauren has, 312 miles of range in the Model S, and I've got, I think, like 305 in the Cybertruck. Do we really both need 300 miles? No, because all it does is Lauren just doesn't charge her car, but maybe like once every 10 or 15 days because she only drives like 15 miles a day. So she just uses the battery that she's carrying around for not having to plug it in, which is fine because we don't have a driveway, and that's kind of convenient for us anyway. But if we had a driveway and a place to park it and plug it in every day, great, that'd be cool. But one of the things that I got to thinking about is why don't they introduce a lower cost or a smaller, lower cost Tesla with a smaller battery pack? Like something that, let's say one of your cars is a 300-mile range car and you're a 2-income household, so you have 2 cars with kids or whatever. Your second car ends up being like a 75-mile range car, and you end up paying, I don't know, $20,000, like a dirt cheap Tesla, like an iPhone C, you know, or whatever. I think it's because most of Tesla's margin is actually in selling you the battery. Think about this. Lithium prices have absolutely collapsed from the insanity of COVID. And I don't think they actually want to give you a smaller battery pack, because I think most of the manufacturing margin is actually buried in the battery pack. In other words, maybe they're making the pack for $1,000, they're selling it to you for $6K. That's $5K a profit. Well, $5K a profit on a $35,000 sale is already 15% margin. Now, I'm not saying that is exactly how it plays out. I'm exaggerating here. I'm just saying I think that one of the reasons why you're not getting smaller packs is because that's where all the margin's buried. Otherwise, like, you're not putting margin really on labor or the, aluminum or the iron or whatever. So I think that's very interesting. Now, with that said, that would be an option for a lower cost vehicle, but we haven't seen that from them as well. Now, I will say FSD is pretty good. I like version 13. I have the latest. Ross doesn't like it. Ross just tweeted, says, not to mention driving FSD 13 yesterday in Venice can't even come close to the ability of Waymo. Waymo's everywhere, and I have to disengage FSD constantly. Was a hectic day of tourists, however. No excuses, FSD is not close. So that's Ross Gerber's take. It is true, Waymos are expanding pretty rapidly, but they're also a very different system, right? LiDAR-based versus Tesla's pure vision-based. But something else that's very interesting for Tesla, though, out of these earnings, and I want to talk about what Wall Street was talking about as well, is that we had a 20% growth in the gigawatt hours of energy production. Energy did so well that even though Tesla stock right now is down about 6.3%, Enphase stock is up 3.8%, probably because of this explosion in battery sales, megapack sales, and solar potentially sales. I'm a big fan of this, by the way. Big fan of what you could sell these battery packs for, like home storage or city storage megapacks. Excuse me. Because the margins are so high. The margins on energy are like 35%. They're incredible. So this is why, again, it sort of reiterates my thesis that they don't want to drop the prices on or drop the size of battery that they're selling you, because that's where they're making the money. The dollar hollers are there. So, look at the last, here. Go to the last earnings release for Tesla. Go to, let's see, let's get a statement over here. Let's go over here to the statement of operations. Let's go right here, energy storage. Let's throw a little highlighter on that. And then let's go to energy storage expenses right here. And all we're gonna do is divide those two lines. And we're going to get the 2024 number, which is the far right. Okay, so let's zoom out a little bit so I can actually see the right line that I'm on. There we go. This number and this number. All right. So our expense, our costs of goods sold, basically, 1651 divided by 2376. Yeah, that's 31% margin, 30.5% margin. So our expense is about 69%. But 30.5% going to gross profit from energy. That's really, really good. That's fantastic margin. But unfortunately, the company's stock price is not predicated on energy right now, because how much profit is that right now? What's the difference? 2376 minus 1651, $725 million. In gross profit. Okay, take off, say, 15% for operating expenses. Let's see, operating expenses here are 2280 divided by 25182. Oh, okay, take off 9%. Minus 9% for OPEX, 725 times 0.91, 659 million of energy, we'll call it op profit. And their net income was 3183 million net income. Energy equals, divided by 2183, 30% of net income. It's great. That's fantastic. That's really, really good as a proportion of how much money they're making. This is a great sector, and it's growing rapidly. And it's probably, honestly, going to double. It could become 50% of their net income. But batteries are not what's propping the stock up. Batteries make money, but don't prop the stock. What props? AI plus robotics. That's what's propping the stock up right now, in my opinion. When I think the valuation, unfortunately, and I've been saying this, I've been saying this a little early. I've been saying this since like $300. I thought it was a little rich. So in fairness, like there has been a euphoric rally that has extended a lot further than I thought it would. Last summer, I made videos talking about how, volatility, and you might remember this. We did an emergency course member live stream on this. Like I did an emergency live. I sent an alert to everybody. I go, this is very important. And I'm like, look, volatility on Tesla is the lowest it's been only 4 times in history over the last 14 years. And every single time after volatility has gotten this low, it has gone up like 50% over the next 3 months. And Tesla did exactly that. So I was right about that. It ran up to about 260 from like 150 at that point. But I didn't think it would extend to, over 400. So obviously I was wrong about that. But let's take a look at this. So the current projections from Wall Street, and in fairness, these are just Wall Street projections. So, they could be overly bearish. But right now we have $2.43 of EPS expected for Tesla for this 3 year. So if I divide that into their price right now, my gosh, there's a child screaming out there. I haven't closed my other door yet. That's a 156 PE ratio right now. Wow, that is loud. I'm going to go get a child in a sec and bring him in here. Give him a piece of my mind. That's 28% average growth is expected over the next 4 years for the company. 156 divided by 28%. It's selling for a 5.5 peg. I mean, even if I price them as an AI company, they should be selling for half of that. Yeah, which would be 380 divided by 2. Yeah, 190 at this earnings per share, right? For 2026, if I multiply their 2026 expected EPS of $4 by a 2.67 like AI style peg ratio times 28% growth, they should be selling for $300 in 2026. Which this somewhat aligns with my like the valuation spreadsheet that I have when I actually price out. I always like to do valuations in 2 ways. One, sort of quick, rough and dirty with a peg sheet, and then another we could get deep sort of into the weeds on a Tesla spreadsheet that I put together. And it somewhat aligns with saying that, yeah, things are a little bit pricey right now. So if I go to 2026 for Tesla, looks like, let's see here, post end of 2026, what do we got here? This is, let's see, let's do this together. I don't have the latest fresh one up, so we'll just do this together. So we'll do the cost per vehicle here. Revenue from energy, $26 billion. This is very, very high. Remember, right now we're like half that, but we expect it to double. So we're gonna put that in there. We are expecting a reduction in the average cost per vehicle. That's fine. Margin 18%. That's fine. We can leave that. And then we're going to give them the 50 PE ratio. Oh, well, actually, yeah, by the end of 2026 with these numbers. Yeah, so I was thinking $300 off the top of my head here with numbers. Now I'm at 244 here with a reasonable end of 2026 level. On, this is with an auto valuation. So this is with a 1.67 peg. If I go to an AI valuation, there we go. Yeah, 381. So basically where the price is today, with an AI valuation, you're in the 300s in 2026 with energy doubling. So the price today assumes that you have vehicle growth. I think we've got vehicle. How much growth do we have in here? Yeah, 3 million vehicles. That assumes 50% vehicle growth at slightly lower prices, 50% energy growth, 18% margins over here, and the services peg ratio, which gives you a higher PE multiple. You're at 381 in 2026. Those are some big assumptions there. Pretty big. Now, if I want to go like, more extreme here, and we're going to sell 5 million robocabs by then, and we're going to sell those robocabs at, 20% margin. I mean, I think it's possible. I mean, then you're at $623. That'd be amazing. Okay, the world is now using robocabs, and we're selling it as a robotaxi, AI service company rather than just a manufacturer. Sure, but I mean, let's be real. We haven't made a single one yet, and entering mass production might give us that extra 1 million units. To get to 1 million units in 2026 for robocabs, assuming flat growth on the others, I mean, I think these are already pretty generous numbers. So anyway, that's where I come from, with this. But anyway, don't get me wrong. Like, I don't want to come across as a Tesla bear. I just think there's been a lot of momentum. And that's unfortunately, after that volatility spike, that kind of created momentum. And then you get excitement over robotics and AI and blah, 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 blah. That's cool. But so what happens when that momentum starts fading? Well, this is a temporary risk factor. When you get something that momentum's up, usually once the momentum fades, you tend to retrace. And the biggest retracement level I have right now is about 318. I think we'll probably hold 318. Breaking 318 would put you back at like the mid 200s, which this is more of where I'd want to buy more anyway. So I just think it would be a buying opportunity. Like, I don't think Tesla's price going down would be a bad thing. I actually think it's just an opportunity for you to buy more for the future, because I do think in the long run, they're on the right trajectory. But in the short term, yes, the valuation is a little bit on the high side. So let's see, did we cover everything? We got first decline in a decade, we covered that. We needed 515,000 vehicle deliveries to have a positive year-over-year growth. We didn't get that. We got 495,000. Production being down 9%. That was weird to me. Why production missed by 9%? I think that's potentially a leading indicator that they're seeing signs of softer sales going forward into Q1, which honestly, I mean, that sort of aligns with I hate to say it, but my bearishness that, yes, there's going to be a lot of euphoria in Q4 after Trump was elected, but Q1, we're going to start getting the reality numbers where, January, February, March, we're going to start seeing people potentially getting laid off. After the holidays, the government workers for polls get laid off, polling workers, private payrolls continue to suffer or continue to be overstated and then revised down. It sort of aligns with just a slowing economic cycle. Usually the cycle doesn't like slow and then get better. Like it's not like if you draw a circle, a typical business cycle doesn't go from boom to slowing to diagonal across and back to boom. It has to go through recession. Now, I don't know when that's going to be. I think it'll be this year, but I could be wrong. I've been wrong before. I might be wrong again. But the reason I share this with you is because I think that there's a great future for Tesla. I think there are going to be better prices to buy it. I think Enphase is a great deal if you're looking for energy bets, but Enphase will get screwed in a recession too. I mean, everybody's just going to get hurt in a recession. So if there is a recession, things will be a lot cheaper in the future. If there's no recession, well, then I look at cheap valuations right now, and Enphase is a very cheap valuation relative to Tesla. So if you like that energy growth, I'd be buying Enphase for the energy growth. That's not recommendation for you. That's just a thesis that I have. If you want more of my theses and talk to me in the live streams, remember, go to meetkevin.com. But anyway, Enphase right now, 71.3 divided by 2.19, selling for about 32 times, and their growth over the next 4 years is expected to be 33. Yeah, so we're selling for a 1 peg, slightly below a 1 peg. It's like a 0.97 peg. Tesla's at a 5.5 peg. Palantir's at like a 10 peg. Price to earnings growth. Y'all know this, but anyway, thanks so much for watching. Okay, I really appreciate y'all. I'll just keep providing value. I'm always just gonna, you don't have to copy me, right? I just want to share my perspective with you, and really, I want everybody to make money. Like, I get happy when other people make money because other people are happy, and it's fun to be around happy people. I'm very depressed when everybody around is like, oh my gosh, I lost my job and I don't have any money. That's sad. I remember that 2008. It's terrible, man. Terrible. Anyway, thanks, folks. See you. Bye.
Why not advertise these things that you told us here? I feel like nobody else knows about this.
We'll try a little advertising and see how it goes.
Congratulations, man. You have done so much. People love you. People look up to you.
Kevin Paffrath there, financial analyst and YouTuber. Meet Kevin. Always great to get your take.